We've got the management of Yatra Online joining in. Dhruv Shringi, who's a co-founder and the Chief Executive Officer of the company. Thank you so much, Dhruv, for taking the time. Could you give us a sense of what stood out to you? What were the highlights according to you?
Sure. Good afternoon to you guys and your viewers. We had a very strong quarter, and we've seen strong traction in terms of demand, especially on the hotel side and on things like corporate travel and MICE. Overall revenue for us was up about 152% year over year. We also saw profitability and EBITDA jump 285%. Net profit was up 143%. Hotel bookings and MICE bookings were up almost 70%. So all in all, we've had a very strong quarter. Obviously, the overall markets are where they are, but from an underlying business point of view, the business is trending very strongly at this point, and demand continues to remain very robust.
Dhruv, it's been an excellent quarter for you guys. I want to understand that first half of FY25 itself, you've done roughly 337 crore odd of revenue, and FY24, your revenue stood at around 422 crores. So I believe that, overall FY25 is going to be crossing that 422 crore mark revenue by quite a bit. Give us some more perspective as to where this top line will end at by the end of FY25 and even the bottom line, because FY24 ended with a loss, but right now you're almost seeing gains of around 11 crores overall in first half of FY25.
Sure. So we continue to see the same kind of momentum that we've seen in the current quarter. So Q2 was strong, Q3 continues to be on a similar trajectory. And we expect Q4 to improve further as we've got new customers which are currently in the process of being implemented on the business travel side. So we've got some large customers which are going to go live towards the end of this calendar year, and we'll see the trading impact of that come through from the months of January onwards. So we only expect positive outcomes from here on the back of the demand and in terms of the customer pipeline that we currently have.
I also want to understand, Dhruv, from an air passenger volume perspective, that has been down 17% this quarter. Overall, from a broader term perspective, why is this happening? Are people not taking flights, or is it because of the kind of mismanagement that airlines are currently, facing? What is happening overall there?
Yeah, I think on that front, while the industry has grown low single digits, on the air passenger side, we did come down a bit in terms of numbers, and that was more of a conscious effort on our part to rationalize the promotion and the discounting cost. We've seen some airlines during the past couple of quarters be more aggressive in terms of the pricing that they're offering directly on their websites. We've taken the view of not participating in those deep discounts because we feel, especially on the corporate travel side, we've got enough and more positive momentum which will sustain us through from the growth that we are seeing on the hotels and packages side. So I would rather focus our efforts on the more profitable parts of our business rather than trying to fight a pricing battle at this point of time on the consumer side. My take on the consumer side is that, the consumer market is continuing to grow and will be multiple size of where it is right now. So there will be some kind of short-term blips and correction that will happen, but the long-term trend on consumer also is very secular. But today we've got a very robust pipeline on the corporate side, on the business travel side, and that's what we are more focused on.
I also want to understand that because, your corporate client base overall is growing, quite significantly. Margins for this quarter stood at 12%, which has not been the case for Yatra Online so far. So do you think that these margins at 12% are sustainable going forward?
See, our endeavor would be, as the mix of our business is moving more and more towards corporate travel where margins are higher, the 3-year kind of margin profile that we are looking at should take us closer to about 20%. So we will continue to see, beyond seasonality, margins improving on a secular basis. There will be some seasonal drops that will happen. So for example, this current quarter that you see, in this current quarter, business travel is extremely low, given that you've got the entire Diwali Dussehra break, and then you have a Christmas, New Year break as well. So this is typically a slower quarter for business travel. So there'll be some kind of flatlining of margins in this quarter. But then again, as you move into Jan, Feb, March, you'll see margins improve. So what we are projecting is a gradual improvement in margin, literally quarter on quarter, taking us to a more steady state of 20% in the midterm.
I'm just curious, based on that answer, Dhruv, or based on what you just described in terms of seasonality affecting the business, can we then anticipate that even when you do hit that 20%, there will be a little bit of chunkiness in the earnings and there will be a little bit of fluctuation in margins where you see in lean quarters margins dipping?
So typically for business travel, there's only one lean quarter, which is the October to December quarter, right? All the other quarters tend to be reasonably robust. And this quarter also is more on account of the number of holidays that you have. During the Diwali Dussehra, travel comes down on the business travel side while leisure picks up. Similarly, in the months of December, the last 10, 15 days, you see very limited amount of business travel while personal travel is there. So this quarter will have a peculiarity of seasonality, but otherwise it will be fairly secular.
Dhruv, thanks so much for joining in, for giving us that perspective, and look forward to speaking to you very soon after your next results.
Not at all. My pleasure. Thank you.